Hey guys, Stock Saturday, and it's been a rough week for me. Markets sort of were down on the Friday, sort of news saying people didn't want to be long through the weekend. It seems to be sort of volatile times for, new tariffs and new Trump news in general. But yeah, everything sort of seemed to sell off yesterday. I'm down about 8%, 36,000, which is quite a bit worse than the Nasdaq, 1.93%, and S&P was down 1.67%. So, yeah, 8%. And where has that come from? I guess no surprise, gold and silver and crypto. There was an exchange hack from Bybit, so on the crypto side, so that sort of knocked what was a somewhat positive day yesterday. But yeah, for the week, the miners had really gone nowhere and are now down. So yeah, there's that, and gold and silver miners, which I will come back to. But yeah, we also in here had quite a few sort of modest declines, I suppose. TSMC back below 200, Broadcom sort of down from about 240 to 218. Himax sort of unsure about this. I think it needs a little bit more concrete news about the new silicon photonics. Vanguard Emerging Markets is the only one sort of trickling up with the positive China news. Obviously, I did sell Prosus rather too early, below 40 euros. So yeah, that wasn't the best timed, but that's just me. Yeah, we've had some reasonable others. CME Group doing reasonably well. BlackRock sort of coming down a little, but yeah, nothing too much. Adecco Agro was quite funny. It sort of got about 10% positive move on news that Tether, of all people, the cryptocurrency stablecoin, have put in an offer for to increase their stake. I didn't realise they already hold 19% of Adecco Agro, but they made an offer to increase that to 51%. So they would be a majority shareholder. And yeah, this sort of is being weighed up. There was no indication as to sort of whether they would want that to go ahead, but yeah, very interesting sort of crypto and stock side colliding, if you like. And Euronext, to be fair, is pushing up. I was kind of looking to increase that position, but yeah, not sort of super keen to at the moment with other sort of opportunities elsewhere. But yeah, it's doing quite well. So what happened with the gold miners, or my gold miners in particular? I think some of the others are doing okay, and sort of gold at all-time highs, sort of trading blows at 2,900 to 2,950 on the futures at least. But yeah, Coeur Mining dropped 25% this week. It's sort of been trickling down anyway, and then the earnings came out, and yeah, not particularly good. People have been sort of digesting this, and yeah, it sort of took a heavy blow down on Friday. A little bit strange, sort of the earnings had already come out Wednesday night, I think, and then sort of it was Friday that it finally dropped. So yeah, they've come out with their sort of production scorecards, trying to make things look, very, very nice. And for the most part, it was reasonably good on 2024 production, 341,000 ounces. That's sort of, roughly what I was hoping for. 11.4 million on the silver, and yeah, they sort of still only give cash costs, so that's not ideal. But yeah, cash costs were sort of all on target. But it's this 2025 production guidance that is disappointing. So Las Chispas is the new, I'm sure I'm butchering that Mexican name, but yeah, guidance of 42,500 to 52,500 ounces. They've noted that this is 10.5 months of production, so obviously 2026 will be a little bit more than that, but I thought we were hoping for sort of closer to 100,000 ounces. And then, yeah, some of the others are looking a little bit less positive. Palmarejo, 95 to 105 from sort of 108 in 2024. Rochester, they have done their expansion, so that was 39. They're projecting sort of 60 to 75. That's okay. Kensington is sort of, well, midpoint guidance, I guess, is ever so slightly higher than last year. And Wharf, sort of pretty much the same, slightly lower than last year. But yeah, 380 to 440,000. I think we were sort of hoping for, you know, probably the midpoint to be 440,000, if not the lower end being 440,000 of gold. So yeah, that's not ideal. And on the silver side, I kind of thought when they originally were talking about this transaction that Las Chispas was going to be 9 million ounces of silver. So again, 10.5 months. They're sort of saying, 14% of the year's production in Q1 because it's only 10.5 months, but 4.25 to 5.25 million as opposed to 9 million, or what would probably be 8 million this year and 9 million next year. Again, Palmarejo guidance for the silver down a reasonable amount. Rochester up quite a bit, 7 to 8.3 million, and Wharf doesn't do a lot of silver anyway. So yeah, 16.7 to 20.25. I was kind of hoping for 22 million. So yeah, not good at all. 11.39 million this year, so it's, they're saying strong 2025 numbers and, 60% gain, 70% gain. But if you were guiding 22 million ounces, basically, then yeah, it's going to take a knock. They're noting the Rochester expansion is now complete, and it sort of does highlight that it wasn't really worth doing sort of not so long ago, 2022. They were at $2,268. This is still costs applicable to sales, adjusted, so essentially a cash cost, not all-in sustaining, and $25 silver. So it was mining at a loss in 2022, and they've expanded it. Grades a lot better, and for 2025 they're expecting 1,250 to 1,450 on the gold and 1,450 to 1,650 on silver. Cash cost, admittedly, so it's still not super cheap, but yeah, not too bad. And so on the financials, it's looked sort of a little bit weak, really. Gold production for Q4 was down. Silver production slightly up from last quarter. Quarter four, I sort of kind of thought was generally quite strong for most miners. Sort of depends on weather and sort of a number of different things, but yeah, sort of gets 340,000 gold ounces and 11.4 million silver. So it's not terrible. Sort of gold and silver both ending 2024 pretty strong, and have gone into 2025 even stronger. So yeah, revenues up. Exploration investment, obviously, still putting quite a lot into their new silver tip mine. Sort of the exploration project for the future. You've always got to have one because their mine life for most of the mines is sort of 5 to 7 years. But yeah, sort of net income was 37.8 million for this quarter, lower than last quarter. Cash flow from operating activities 63.8. Again, quite a bit lower, with gold and silver significantly higher. So not ideal. But for the year, 174 million. Still a lot of capex. So yeah, you have negative free cash flow for the year of 9 million. That will improve, obviously. Not going to have 364 million of capex next year, but yeah, it's not going to be sort of printing money from the looks of it. In the quarter, 16.1 million of free cash flow. Again, that should improve. And then, yeah, the sort of adjusted numbers. Everyone likes the adjusted numbers. So adjusted net income adjusted net income of 70 million and 339 million in adjusted EBITDA. So yeah, it's pretty good, but not what people were expecting. And capex for next year is still going to be quite high. So they've done 183 million this year, and 2025 they're expecting sort of 175 for Coeur Mining's existing operations, and then sort of 32 for Las Chispas. So yeah, over 200 million in capex. So yeah, going to need that increased EBITDA to make some real profit. So balance sheet, again, I kind of thought could look a bit better. They're showing this debt to EBITDA ratio coming right down. That's largely as a result of EBITDA going up. They're not really sort of paying off huge amounts of debt. Not really earning a huge amount in profits as we saw. So I kind of thought they would have been paying off a bit more debt. 5.125% senior notes haven't budged at all. Revolving credit facility is down 30 million, but it's still up on last year. Obviously, they were still sort of spending quite a bit last year. Capital lease obligations are up 30 million since last year and 15 million since last quarter. And cash is down 21 million, 22 million from last quarter. So, yeah, net, it's not looking much better than last quarter, where obviously Equinox, as we'll come to, are improving their balance sheet quite a bit. So 2025 guidance we've seen, and yeah, I think that is basically everything. They sort of give you this little summary of each mine, and as I say, sort of 7 years on the new one, $1.6 billion transaction. I'm kind of thinking maybe was overpaying quite a bit, sort of buying in the bull market basically. But yeah, Palmarejo 6 years left, Rochester 16 years now that they've done their big expansion, so that is pretty good. But Kensington 5 years, that's gold only, and Wharf 6 years, again pretty much gold only. So not the longest life, not a huge amount of profit, not really paying debt down, and fairly poor guidance for 2025. But other than that, lovely. So coming on to Equinox, I kind of thought things were looking a little bit better for them, although they have one little niggle that they will come to. They sort of give you this, everything in text form, but I prefer the table. So yeah, gold produced 214,000 ounces. They sort of had a little bit more in inventory, and that's 622,000 for the year. Sort of Greenstone mine now coming in, sort of 40,000 ounces more than last quarter, so that's pretty good. Revenue up to 575 million, and yeah, income from mine operations up 70%, so that's pretty good. 304 million for the year and 170 million just in this quarter, so that's pretty good. Actually got some net income, 28 million, as opposed to pretty much nothing. This sort of large number was a one-off, partly was a one-off tax adjustment, I think it was. So yeah, adjusted EBITDA, sort of, don't know, maybe a little bit better to use, but that was showing very, very high last quarter, I think it was. So yeah, adjusted net income 77 million, adjusted EPS, yeah, all looking sort of pretty good. Cash and cash equivalents up to 239 million from 167, and yeah, net debt. So yeah, they've paid off a reasonable amount of debt, but part of that is just from having an increased cash balance. But yeah, net debt at least down 206 million. So they paid off a reasonable amount of debt, and then cash is up sort of 70 million or so. So pretty good. And so compared to their guidance, obviously they lowered guidance right the way at the end of 2024, right the way down to where this is now. So it is pretty much on track. Cash costs were even higher than they projected. All-in sustaining cost though $1,870. That's obviously on the high side and is coming down. Sustaining capital did come in a little bit lower than expected, and non-sustaining, so yeah, not too bad, but 621,000 is quite a bit less than what we were hoping for. 2025 is where people have sort of got a little bit sort of spooked, I suppose, partly because they are not issuing 2025 cost and production guidance for Los Filos, the Mexican mine. They're saying continuing operations in 2025 is subject to completion of new long-term agreements with 3 local communities. They have said 2 communities have ratified and signed new long-term agreements, but 1 remains outstanding. And if they're unable to satisfactorily complete these agreements, the company will suspend operations indefinitely. So that sounds like a threat, I would say, rather than, I think, if they don't sign it, there'll probably still be ongoing discussions because they produced 170,000 ounces, I think it was this year, albeit not super, not super profitably. I think, where are we? Los Filos. Gold produced 170,000 and all-in sustaining cost was $2,185. So it's not the most profitable mine, and they're saying it needs to have a fair bit of money spent on it. But without the agreements, they're saying they would shut it down, which even at sort of 21.85, it's worth mining at today's prices. So we'd hope that that can get over the line. Without that, guidance sort of isn't really up all that much. The greenstone sort of won't get to 100% capacity this year. Hopefully will next year. They've sort of always been saying 400,000 ounces a year, and they're saying sort of 325,000 on the midpoint. But sort of $1,100 all-in sustaining cost. That is obviously really, really solid at today's price. And then, the Mesquite mine, sort of 100,000 nearly at 1775. That's not terrible. And then the sort of Brazil complex that they're calling it now, or Arizona, the Bahia complex, and their smaller mine, all sort of in the $1,900 range, which again, close to $1,000 of profit on top of that all-in sustaining cost. So not terrible. And if they add Los Filos back in, then we should be sort of, that'll push up all-in sustaining cost, admittedly, but profit is profit. Without it, you're looking at sort of 690,000. So not good at all. They've been sort of saying, putting 1 million ounces in their presentation for quite a while and saying that they will get there. But without Los Filos, that's basically not going to happen for years and years. So if you add back in Los Filos, let's say it gets the agreements, then I guess we would be looking at sort of 860,000 at the sort of midpoint of guidance, and then 2026 greenstone should be sort of up to scratch, and we'd be sort of looking at 930,000 ish. Not quite the million, but they need sort of an expansion of one of their other mines. They did shut their Castle Mountain mine, saying that needs a load of money spent on it, and then it could be sort of I think they said 200,000 ounces. So basically, we've got a somewhat binary event coming up, I guess. Whether Los Filos is suspended or not. If it is, then my sort of valuation ideas go out the window, basically, because I was basing it on sort of 900, maybe not 950 as I was optimistically thinking, but 900,000 ounces of gold. And yeah, we could be looking at sort of not even 700,000, albeit at a reasonably good cost, $1,500 an ounce. But they've been saying $1,500 for quite a while, and sort of even including Los Filos. So yeah, not if that gets added back in, then we're going to be quite a bit above that, I would have thought. Is certainly a case of over promising and under delivering on these gold miners. I'm not sure if it's I haven't really sort of looked into whether the other miners sort of are similar, but yeah, I would rather they were a little bit on the more on the cautious side and end up sort of over delivering rather than this way around. The sort of balance sheet, I think it's better to compare to last quarter rather than this quarter last year, because they are sort of now finished their finished Greenstone and now sort of paying off some of that debt. But yeah, cash is at 239 million as they noted, and 1.2 billion of non current liability loans and quite a bit of current portion, but as they're saying, this should all be getting paid down over the next couple of years, basically. And just noting as well, they give the all-in sustaining cost figure for Q4 of 1,652, down from 1,994 just a quarter ago. So that's a huge improvement and sort of getting towards their 1,500 that they're projecting. So they are still projecting, if they can have Los Filos go ahead, sort of close to $1 billion in EBITDA next year. So for what is a $3.5 billion company, that is really, really solid. But yeah, it's again depending on a sort of binary event now of whether Los Filos can go ahead. So after all that bad earnings, what did we have on economic news? The UK sort of came out with their job numbers, sort of looking okay, really, slightly higher claimant count of unemployment claims, but yeah, it was sort of down. Last month's was revised down. This month's was a little bit higher, so nothing really there. Average earnings, including bonus, at 6%. So that's sort of, I guess people will see as good, but that's quite inflationary. Unemployment rate was expected to tick up a little, and it didn't. So 4.4%. That's reasonably good, I suppose. CPI for January was all sort of a little bit lower than expected. Month on month was minus 0.4%. I suppose that's taking Christmas into account. It's on the core side 3.7% higher than last year, and was 3.2% last month. So yeah, it's ticked up. That was expected. And headline is 3%. So nowhere near sort of 2%, but no one seems to be actually, demanding 2% at the moment. They seem to be happy with a little bit higher than that. Erode some of that debt. Thursday you had jobless claim numbers, was sort of basically bang on. We haven't really seen much change there to get worried about. Retail sales on Friday in the UK was incredibly strong. Well, I suppose you have got inflation, obviously running at, as they say, 3.7% on core inflation, and core retail sales up 2.1%. So if this isn't, I don't think this is inflation adjusted. It's up less than inflation. So you could say people aren't sort of particularly spending that much, maybe less things at a slightly higher price. Public sector borrowing, to be fair, was expected to be a 20 billion surplus, and it was a 15 billion surplus, but it's still a surplus. So yeah, for 1 month at least. And that was about it for the news. So, portfolio-wise, as I say, it's the ISA side that really got whacked. CleanSpark now down to $9.24. Coeur Mining down to $5.46 after a 25% loss. Not exactly great. Riot Platforms down to $10.46, and yeah, Equinox has sort of been faring reasonably well, to be honest. People sort of digested the earnings and sort of, I think, initially saw that low guidance number and freaked out a little bit, and then realised, well, they've just excluded loss fee loss. And I didn't hear the earnings call, but I'm sure Ross Beatty will have been saying that they're almost certain to get that over the line, and they just didn't want to include guidance if it wasn't definite, because nobody wants to drop guidance by 170,000 ounces. So yeah, there you go. Fresnillo sort of, I think, is down slightly, but still looking pretty good with their enormous production. And yeah, the other sort of smaller positions doing okay, I suppose. Although Hive down to $2.49. On the Interactive Brokers side, sort of hasn't really moved all that much, to be honest. Pan American still 24.44, and KGHM sort of largely unchanged. Options side has taken a fair whack. Equinox was sort of up to, I think, 54,000 on Thursday, and is now sort of back down. Ended up back 2,000 down on the week. Hymax sort of dropping back a little, but not too much. Again, that's been up and down sort of £5,000 to £10,000 during the week. Hive, as I say, I bought quite a lot of Hive this week, so it's showing not as much down as probably should be. I think I was at 780 contracts, and I'm now at 904. So kind of seeing this as potentially the bottom, and I sort of had obviously quite a bit of cash still in it. It's earning no interest, so to be fair, I mean, I could stick it in a money market fund or something in there, but I just didn't want the hassle in case I wanted to deploy this at short notice. So yeah, options market obviously can be very volatile. I kind of wanted it there to pile in if need be. But yeah, I did buy quite a lot of Hive this week. Riot sort of taken a fairly big hit. That's 16, I think, down to 10. And Coeur Mining similarly, I think it was about 15,000 down to under 10. So yeah, fair old whack on this side. Not unexpected with the drops, but we'll see where things go. So leave your thoughts in comments below. Let's hope for a solid sort of rest of the year. Hope we've bottomed in some of these markets, and like and subscribe. See you soon.